tonight I want to go over, how to avoid that and strictly rely on your indicators, for the most part. So that way you can just ride the wave on these bigger moves and then also identify the potential reversals based on these indicators that we're using. So we got a few members here. Looks like we got Viru. Welcome, Viru. Glad you could make it.
Thank you, guys. Hi, this is Virender Man, and I'm a real estate as well as the equity investors.
That's awesome, man. Well, most of us here are real estate investors, contractors, realtors. So you're in the right place. Now we'll
That's
become
awesome.
full-time traders. Awesome. Okay, so let's pick on the most popular stock, which is AMC. And when I'm trading, guys, I'm typically looking at the 1 minute, 5 minute, 15, and the 1 hour. So as you can see right here on your screen, this is the time frame that I focus in. So whenever I'm trading or about to trade, this is literally how I analyze my patterns and charts to figure out, okay, where is the stock going? How far will it go? And how could I approach it based on entries and exits? So first of all, I look at the bigger time frame. Okay, so let's zoom out. So I'll zoom out on the 1 hour. So this is maximize that. Okay, zoom out. And so you kind of see a general areas here, right? You got resistance in this level. You got lows, potential lows here, and you got resistance coming up right around here. Let's see, right here, right? And then in between is pretty much just a channel. So to me, until it breaks above or below, right? Um, that's kind of its range. Of course, you can always tighten it up by drawing more support and resistance, but then your chart will just get all, you know, uh, messy and hard to really see through it. Okay, so so with that said, let's just say, because my trading style is scalping, right? For those of you that don't know what scalping is, it's just I'm an intraday trader. I catch, a couple minutes of the move. So let's just say here, the day before, let's just say AMC right here. So for the most part, I'm catching moves like this, right? This little moves like this, or sometimes this, right? I try to avoid the choppy areas, but then we don't always know when the chop is gonna happen. Okay, so what I do is once I get a range like this in a 1 minute or even in a 5 minute, the tools that I use is the 10 and 20 SMAs. So the 10 SMAs is the yellow, and the blue is my 20 SMA. The way I use them in congruent to the price candle is if the price candle is above, right? So say the price candle is up here, and then I have a kind of like a basket or a cup looking. As long as the 10 is above the 20 and it's the trend of the 10 and 20 is more of an upward trend, then that to me is bullish, right? Until it flips to the other way, like this, the 10 and 20. Now the 10 is in the bottom and the 20 is on top, and your price candle is down here, then that's bearish to me. So any pops on the price candle, I'm likely to short it against the 10 or 20. Of course, the 20 is stronger than the 10, and then also you can gauge the strength of the 10 and 20 SMAs based on the time frame of the chart that you're using. So for example, if you're using the 1 hour chart to use as a support on the like this example right here, you have the 20 and then you have the 10 up here, right? So these 10 and 20 are stronger than the 15 or the 5 or the 1 minute. So in this case, it's dipping down to the 10. I'll probably do a test sample dip buy right here if it holds, and if it doesn't hold, just cut it, and wait for the 20 SMA itself for potential bounce. So as you can see, it actually bounced, right? And then another um, confirmation that this has a higher probability of bouncing is because the 10 and 20 is uptrending, right? So in uptrending, this is a buying momentum, and so therefore I would likely take that trade. So the next question would be, okay, how would I know how far this bounce is going to go, right? So now you're in the trade, you bought the dip into the 20 SMA. I know you're like wondering, okay, how far is this going to go, TJ? Like, where do I exit? Blah, blah, blah. So I use it right here. So look at the where the arrow is, right? And then where on the 1 minute, okay? And I also have on my, let's see, on my settings, I have my synchronized crosshair positions, okay? Highly recommend you guys turn that on as well because I can literally, on a 1 hour, I can put my crosshair at the bottom of that. Um, let's see. Actually, let's say I'm not looking at the 1 hour and I'm looking at the 1 minute, for example. I'm like, okay, it's dipping down and I don't know how far that dip's gonna go, right? Because you don't see it. Because most scalpers are using 1 minute or 5 minute, right? So if this is dipping down and you put your crosshair at the bottom of that red candle, if you look at the 1 hour time frame, you can see it's dipping into the 20 SMA. You would miss that support area if you didn't have all four of these charts up at the same time. Okay. So once you find that, there is a support on the 20 SMA, so you buy it, right? And now you're looking for the upside. So look how far this went up, and we're trying to figure out, okay, why did it stop there? So what do we want to do is put a line right here, okay? And then typically, if I can't find any in comparison to the other charts, like why did it stop there? Sorry. You can see the pre-market, it was a pre-market high area, right? And another thing you can do is you can go in a bigger time frame, like the 4 hours, okay? If there's nothing there, you go in a bigger time frame, like the 1 day, all right? So obviously there's nothing showing besides here on the chart itself, right? On a daily, there's topping right here. So if you draw your line, now it shows up on the other charts on the 1 minute, right? So now you can kind of identify, okay, it was topping off right here on this bounce because it was resisting on the daily previous high like a couple days ago. Okay, so that's a topping candle, and we know there was a sellers right there because it drove it back down. So as we know, the behaviors and patterns of these moves is based on previous human behavior, which is looking left. So with that said, it rejected, right? So now what I use is what I call it, the 5 lines, or the actual name for it is the quadrant. So I go once a stock determines a low and then another high for that day, right? And it reverses. Now I'll use this range as a potential the rest of the day movement. So this tool right here is what I use to scalp, right? This is for scalping specifically, not for swing trading or long-term investing. But the fundamental of how to use this tool is the same. So now it might look pretty messy here. Let me enlarge it. Okay. So remember, let's just pretend this whole area doesn't exist yet. All to the right doesn't exist. We only have this. Okay. So with that said, anytime it crosses over the downside, I'm using each one of these levels as support or resistance. Okay. And the rule is whenever a stock makes a move up and down, or any trend for that matter, the reversal of that trend is higher probability that it will go to the 50% level. Okay, 50% level. And as you can see right here, right here was the actual real bounce, like a mini bounce for that say, and this could have been a decent scalp, right? And then the next target would have been this 75% area before coming back down. And how I use this in congruence with the 10 and 20 SMA is, as you can see, that the 10 and 10 SMA right here, right? Because the 20 is still pointing up. So like I said earlier, when you have your SMA trend is on the upside and the stock is coming down to it like this, the probability of it bouncing back up is high. Now, you want to buy that dip around the 50% level area. The 25% pullback is very less probable of holding, okay? Although the 10 is pointing up, but I like to dip buy at the 50%, okay? And then if it doesn't make it to the 25% bounce or the other 50% on the upside, you have to look at the 10 SMA. As you can see it right here, it's curling. So this curl right here is now it's a downward pressure. So as it hits it right there, um, it pushed it back down. And of course, the 50 SMA has already been tested once. The second time or the third time is weaker. So likely it breaks through. In this case, it did break through. Okay. And what you want to do is aim for the next target, which is this line. Sometimes it gets there, sometimes it doesn't, but the probability of getting there is pretty high. And then for another potential dip buy, and then into the 10 and 20 SMAs. Your 10 and 20 SMAs is now your guide as your support and resistance. Because remember the example I used earlier. If your 10 and 20 is doing this, right, and then your price candle is down here. Actually, let me use a different one. Your price candle is down here. This is more of a bearish. Whenever the price candles drop too far like this, and it tries to bounce back up into the 10 and 20, the probability of it getting rejected because of the trend of the 10 and 20 is pretty high. Okay? Even if you have, like, let's say you look left and there's a support area right here. Let's just say you look left and this is the support, right? Right here on a chart. Even with that support, it does bounce, but the expectancy of it going through higher than you think is very low versus getting rejected on that 10 and 20 SMA, which is what you're seeing right here. Okay, it bounced off from the support, came back up to the 10, and the trend of the 10 and 20 SMA is already downwards, and so therefore it is a selling pressure to further continuation. And the only way you can change that is, or when the reversal happens, okay, let me see, throw this back. Okay, the reversal happens when the 10 or the price candle gets back above the 10 and 20 again. And remember, you want the 10 to lead the 20 on the upside, and you want the 10 to lead the 20 on the downside. Okay, if you're going uh, short. But as you can see right here, the price candle got back above. Okay, and you're using this line. Any of these levels, they're like quarters per quarters levels. Whenever it gets above that, you can use this as support. So as you can see, it bounced off right there. And the moment it got back above the 10 and 20, and it just took off from there. What you want to see is an ascending volume as well in correlation. And then this purple line, guys, is the 200 SMA. All right, I use the 200 SMA because it fluctuates with your different time frame that you use. I also have a 200 daily moving average that's fixed to any time frame. So for example, let me see here if I can find it on the daily. Where's my 200? Right there. So this line right here is a 200-day moving average. But as you can see, this is fixed to the daily because it's a 200 daily moving average. Okay, it's not a simple moving average. So simple moving average, it fluctuates with your time frame, which is nice because it's an added layer of strong support or resistance in your chart. Okay, so as you can see it right here. Okay, now there's literally three supports right here, right? This is where they crossed over. Once your price candle got above, it retested, and now you have three supporting higher higher lows with all your SMAs supporting as a base floor for takeoff. Okay, and from there it just stays above. From there it stays above. Okay, you can see the 10 and 20 trend on the upside. Remember what I said? As long as your price candle's up here and it tries to come down, the probability of it bouncing is pretty high as long as you have an uptrend pattern on your SMAs. Once it starts to curl down like this area right here, you can see it, right? It starts to curl down and now it becomes a selling pressure. Okay, so that's how I use the 10 and 20 SMAs when I'm trading and scalping. And then as far as the levels, let's go over the levels now. Let me clean this up. Okay, draw that again on the lows. Okay, now let's look to the right because now we're trying to figure out, okay, let's say we got in this trade right here because we know there's a three layers of support. That's a strong support, right? Now we want to know how far. Then the next level to see as a scalp, right? Quick little pop. This could be a nice, $100, $200 pop right here on a scalp. And as you can see, the price candle. Look at the price candle behavior. It resisted at first. There's a wick on this candle, and it tried to shove it down. But the moment it closed above, right? If you guys understand candle patterns as well, this is a hammer. It's a bullish hammer because it's a green and it looks like Thor's hammer. And so that tells me that this has a further continuation. So the next target is this line. You can see, right? Look at that. So if you're scalping this, you got in right here or here, or you got in here, you got out here, and then you see another green candle for continuation, you got back in, and then your next target is right here, right? You could have exited in this candle or right here, because whenever the long wick candle like this, it's a selling pressure, right? Just to be safe, to book profits, you can get in and out, or you can wait for the next level. And then, as you can see, your dip buy would have been off of this 20 SMA, or you could have tested this 10 for continuation. If you ever watched my previous videos, I always talk about scaling in, right? So in this case, if I sold right in this pop and I'm looking for another re-entry, so I would have did like a small starter into the 10 and added into the 20 for the next leg up. And in this case, remember I said this has already been tested. The next time it pushes up here with volume, it's likely to break. So therefore, my next target would be this green guy. And as you can see, before that candle closed, it had a basically decision to continue to push through, and there was already selling pressure with it. And this candle did close above, right? Now you have to think, okay, if this candle closed above, your next target is this guy. And that's exactly what it did. It held that support level, right? Now you know that you can either buy that dip because you have this line as a support level, or you could buy that dip into the 10 SMA and your next pop is the next line. As you can see, the next line again, there's another decision making to be had. It rejected down to the 10 SMA, but volume, guys, look at the volume, right? Volume increase. This is where you're just sniping this dip buy trades, and then next thing you know, you already tested once. This is gonna blow through with high volume. This is your next target, and you rinse and repeat, right? Until it loses momentum, which as you can see here, a volume drop off. Volume drop off means it's gonna get choppy or it's gonna sell off hard. Okay, so Now you're probably thinking, okay, it's getting choppy. And pay attention too. Whenever stock runs up fast like this to the upside, if you're looking to find, okay, where's my short entry is going to be, is when you see price action like this. It becomes like this. When it becomes choppy like this, the probability of it selling off is pretty high as well. Okay. But now, with you using this tool, you can identify that whenever it's below this line right here, my next target is this. Okay. But as you can see, it kept kind of dancing around that level. But the 10 and 20 was also choppy because what you want to see is a clean, kind of like upside down cup, kind of similar to like this area right here. This would have been a much cleaner entry for a short, okay? Because I know that 10 and 20 is now pointing down. Much better entry would have been when this crossed over, right? So this candle right here would have been a much short entry. And of course, your target is this line for a scalp, okay? And as far as levels, just use the lines to continuation, right? Now, right in this level here, now you see the 10 and 20 is curling back up. So therefore, you have another bullish momentum, right? Another bullish momentum. So therefore, you'll go long here, okay? If you went long there and you were waiting for this price level to hit and it didn't, your stop is when this candle closes on the other side of the line. So technically, your trade loss is this small right here, okay? That small. I'm gonna color that up solid, okay? So your loss is that small. Let me see if I can. Okay, right? Because you entered right here. Actually, let me change that up so you can see it more accurate. So this candle close, you got in for long. You were hoping to get up to the 21.55. It didn't. It sold off instead. It closed below this line right here, which is this candle, right? Actually, yeah, this candle. Okay. So that's your loss. That range of that box is your loss. Okay. But we know that your wins is much bigger. So let's say you went long here now because the candle is above the 10 and 20 and you didn't get out until, let's see, here. You could have gotten out here, or there's no break. There's still an uptrend. You would have gotten out right in this candle right here because that's when it fell below the 10 and 20 and you have the curl. So if I was to draw that box and give you guys a comparison of how big your wins are, okay, that's your wins. So if you follow this process, your winners is always going to be bigger than your losers. Okay. So let me see here. Let me remove that. Okay. All right. So that's this day. Now you're probably wondering, okay, how do I use this um, quadrant line to the following day? Like I don't even have to touch this line. Let's just say I always want to leave it, and I'm just gonna play off of it the following day. Look at what happens here. Okay. Boom, boom, boom. The next day, guess what, guys? This thing is like magic. So he popped up, right? So we know that this price candle is coming up to this line. We know it's resistance, right? The moment it rejects, it gets a red candle, it flushes. First candle stops right here, which you can see it zoomed in. You see stop and then bounce back up. But we know the 10 and 20 now is pointing down exactly right here. Look, can somebody tell me how much confidence of resistance would this level be based on what you see? Can somebody tell me what you see there? All right, chime in, guys. I want you guys to really observe what I'm talking about here. Can you guys hear me? Let's go.
Hey, Chart. Um, What I'm seeing is the 10 and 20 SMA pointing downwards,
Okay,
and then we broke below the 200 SMA.
boom.
So that's probably gonna act as a resistance when it retests again,
Yep,
like we see on the other candles.
hmm
So that's a good uh, setup to go short.
yep, exactly. So not only did it test it once, twice, three times, three times. You had three shots at shorting this right here at this level and then riding it down, right? And then here's how you can ride these moves longer. So we know that you can scalp and get out here, and we know that you can scalp and get out there. But one thing's for sure is when you have the 10 and 20 have a strong trend in that direction, the likelihood of it breaking to for reversal is very low. So as you can see, it tested, right? So it bounced down and then it tried to hold this support level area, this line, and that's why you see this long wick. It bounced back up, right, from here, bounced back up to the 10 and 20 and the 200 resistance. You could have reloaded right here on a short, right, and then boom, rode it all the way down, okay, and then it bounced before this line right here, but that's nothing to worry about. When it popped back up to the 10 and even blow through it, right, and try to go to the 20, but this line right here acting as a resistance area as well in favor to you, right? And then it rejected from there. Now it touched this actual 50% line, try to bounce up again. Now you have the 10 and the 20 with a strong trend on the downside, shoves it down again until it breaks. But guess what? When it breaks to the upside, what do you see now? The basket, okay? And it's going to rinse and repeat that process and just going off of these lines, right? Look at this. It tried to break through, but we know there's resistance right here on this line, on the quadrant line, and you have the 200 approaching. Even if this pushed up to here, I'm going to short it in this level again for a potential downside further here, okay? Because we know that there's support here, but this was this big sell-off. So once it slams, I wouldn't even worry about cashing out right there. I'd worry about probably like in this area, the 10 and 20 because it's pointing up. And if that breaks through, and then of course the 50%, and you just rinse and repeat. Look at this. Look how well it guides that level using it as a support area. Okay. And then once it got above again, right here, right, you can see now you have triple layers again. You have the 10, the 20, and the quadrant line acting as your support. Okay, consolidation. This is the same story from the day before. You're looking for a reversal, right? The consolidation, right? This is basically we call this exhaustion candle because after a run up, everybody's trying to decide do they want to take profits, and then also the short sellers are piling on to short the stock to come down further. And so on the downside, a similar story. This is exhaustion candle on the downside, right? Now you have dip buyers coming in trying to push it back up, and the sellers are getting overwhelmed. And so therefore you can see it on the 10 and 20 it starts to curl, right? And then now you just write it up again. Rinse and repeat process. Now the 10 and 20 is pointing up. Okay. Now you have buying momentum. So whenever you dip down to it, the probability of it pushing is pretty high. You did have resistance right here. That's why it sold off. But you have the 10 and 20 in your favor. Okay. Until you break. Now you have one layer here. You're going against 2 to 1, right? You have the 200 day or 200 SMA versus the 10 and 20 pushing up. And then again with volume coming in. And then you just play off of those levels. As you can see, it rode that 200 SMA as well. So you have to consider them as you get closer. All right. And let's see. You can literally see these levels getting hit. right? Remember, we drew that from the previous day. And this, I could literally leave this indicator on here and just play on base off of it the following day, and it just keeps going and going and going. And that's how I'm able to scalp these trades with accurate, entries and exits. So, does that make sense? What's your questions? Let's open it up for my Q&A real quick before moving on to the next topic.
Yeah, I just have a question really quick about the quadrant. I want to make sure I'm understanding this correctly. You were drawing it in earlier when you had a trend going up and then like a reversal for you, so you could indicate like your low and your high. Um, am I understanding that correctly?
So the quadrant that I used, right? You know that tool, right? So if you click your mouse and you can find it at the very bottom left, and I'm using Thinkorswim. I'm not sure if they have this same tool with other brokers, but with Thinkorswim, you'll find it right here, or in the bottom right corner right here, you'll click it and you'll see all the other tools. As far as drawing them, what I want to see is for the day, I want to see a range happen. And if you don't want to wait for that range to happen, you can go from the previous day and go, okay, where's my lows and highs? So let's say pre-market, right? You're trying to figure out, let's just say, this day doesn't exist yet. And now you're looking at the pre-market, you're like, which way is it gonna go? Is it gonna go up or down? We don't know, and nobody knows. So what you want to do is you know that this is the zone, right? This is within the area right now. This is where the current price. So I'd probably use this range or this range right here, right? The most recent trend. So the most recent trend is this guy from this high to this low, right? If you don't want to use that, because remember, it literally follows these lines so accurately. And this is just 25% levels, okay, in increments. So let me share with you the actual, and take a screenshot of this or take a picture of it so you have it. So here's um, the specs. So you have -1, -7.5, 5, 25, 0. And again, it gives me a 100% to the downside and 100% to the upside. Okay.
Okay.
So take a picture of that or screenshot it. You can add these levels and the colors. You can customize it yourself and how it looks and feels. You can even change how big the line you want. You can make them as, you know, really fat or skinny. So,
Gotcha.
all right.
Okay. Yeah, that makes sense. Thank you.
Yeah. So to be honest, like, because everything is it's all human behavior, and it literally there's other tools like the Fibonacci, there's the Fibonacci fan, there's retracement, like there's so many different other tools. But I've just to simplify, I've used this one many times because when I was starting to trade, here's to give you a background, right? I didn't know any indicators or tools. I didn't even have the SMAs. And so what I would do is I would just use the price levels. So I'd be like, okay, this is the high, and this is, I guarantee you guys can relate to this. I'm like, okay, that's the high. Here's the low. Here's the high. Here's the low, right? That's what you would do. And then you draw right here. So therefore, you try to use these levels as your support and resistance. Okay? Now, you'd have to do that every time, right? Every time you move over, you're like, okay, draw again here. All right, there's another low here, like this draw here, right? It gets really messy and it becomes more random, right? It becomes more random. You're like, which one do I follow? Which one do I listen to, right? And and then I was like, there's got to be a better way. So I like, okay, let's just turn it into a five. So then I would draw the highest, okay, and then I would draw the lowest, and then I would literally just go like eyeball it even, just like go, okay, 50%. So 50% is right about here. And then another thing I do is I go another, okay, 50% again on these two. So I draw another 50% right here. Just eyeball it, right? I'm not even specifically trying to pick the top of these candles. I'm just eyeballing it and measuring it with my eyes. And then the same thing here. I'll draw 50%. They're not exactly like accurate, right? But that's what I was doing before to find support and resistance levels. And then what was crazy is I would look to the right and see these levels get hit with accuracy, right? Okay, look at this. Okay, like I literally just randomly drew them, right? But then it would hit with accuracy. I'm like, wait, I'm seeing something here. So, and then found out this tool right here existed, right? It was actually just four. I think it was just four. That's why it's called the quadrant line. But I modified it to where I added these other levels because I figured it's a continuation, right? It's a 1/4% continuation. And now I can literally just draw them, and then now I can use it as the levels, right? I can use it as the levels, and now you can see, and you can move it too. Like let's say the day gets tighter, right? It's like it's more of a dead day. Let's say right here. So let's say this area, yeah, this whole area right here. You're like trying to scalp this levels or trying to figure out how far this is gonna go. So then you would just draw this here from here to here. Let's just say that's the existing current price candle, and you're trying to figure out where it's going right next. Look how tight, look how much tighter that is. Okay, look at this. Look, it's literally hitting these levels with accuracy. Okay, look at this. And then down here, right? And then it hits up here. Like it's insane how accurate these numbers gets hit. Okay, you can make them as big as you want. So another example is, let's see, let's go into the hourly now. Okay, let's go to hourly. So there's the 1 hour chart. Let's clean this up. Okay, same thing. So this is the most recent range, right? Because I don't know the next 2 days. And look how big this range is. Okay, the bigger the range, the more patient you gotta be to hit those levels. Okay, because obviously it's bigger range. Um, you're you have to be more patient on these trades, and this is why I was telling Viru that this same strategy you can use on like swing trades, because once a level gets hit, right, and then you can see these rejections right here, then you can trade this next level down, and this next level down is no longer 1 minute or 2 minute trade. It becomes more of like 15 or 30-minute move. This is actually 1 hour. So you have one, two, three, four. That's a 4 hour trade before it hits the next target for you to get out, right? So with that said, let's say the long trade. So right here, we're trying to find our inflection point. You have two right here. Best part was, let's see, like right around here, this level. So the 200 SMA acting as a support. And what you're waiting for is to get above the 10 and 20 as well, because now in during that time frame, that's 1, 2, and 3. That's 3 hours of waiting for it to make a decision to whether to get back up above the 10 and 20 or get below the 200. If it stayed below the 200, the 10 and 20 is going to start curling down like this, right? Then you'll have three layers again on your favor to the short side. But in this case, it went up above. Now you have three. They're not that close, but the 10 and 20 starts to curl up, right? Starts to curl up right here. So therefore, you would have bought that dip and then rode it up, and there was no exit sign on a swing trade, because remember, you're using the hourly now to trade. There was no exit sign because the 10 and 20 is literally guiding it up. Okay?
Right. And the volume
And
too at
and
the
the
same
yep,
time is going up.
there you
Okay.
go. Now you're seeing that the volume is going up. So therefore, it's this is your own discretion. If you got it in a trade right here, you can take profits here, you can take profits here, or you can take profits here. It is all up to you how much you want to risk. I probably would have been out at the 50% because that's just the rule of the move, right? Whenever a stock hits the 50% area, um, of course you wouldn't see this actually because this doesn't exist yet. You'll be charting it from down here, okay? So you can take these exits or you can ride it along, right? Until it breaks the 10 and 20. Let's just say you don't have this as your guide, right? Now you're like, oh my God, where's it gonna go? But you have the 10 and 20 still guiding you that with the buying momentum. So as you can see, it dipped down, it broke the 10, but the 20 is stronger, and then therefore volume increase as well, right? Look at this, much bigger than this guy. Volume increase, and then it just shot it up, okay? And it did the same thing here, trying to sell off, but now you can see that the 10 is starting to weaken. It even got weaker right here too from that sell-off. Whenever you start to see a curl at the top of your 10, that is the sign that the momentum is dying. So you have to be cautious on longing. If you're still long bias on this, you have to size down, right? You can't go, let's say the starter right here was like, 1,000 shares. On this dip buy with the 10 weakening at the top, you probably want to go with like 200 shares or something. Okay. So therefore, and then of course you still rinse and repeating the process, but just be cautious that this momentum is dying, the volume is fading off right here, and then you have to think like uh, a trader that took the trade down here. What are you going to be thinking when you're up here when you start seeing red candles? You're going to be thinking, I need to lock in profits. And whenever you lock in profits to sell, you become a selling momentum to the weaker stock already. And then everybody else is thinking the same thing. Hey, I made money over here during this run. I better lock in my profits too. And it becomes self-fulfilling prophecy. Everybody becomes a seller. And then the short seller is also going to pile on because it's looking weak, right? Whenever it weaks, there's all the big players like that's their ultimate signal. It's like, all right, let's hammer down on shorts, and then they just drive it back down. Okay, so as of right now, AMC is looking weak, right? This is an exhaustion, bunch of exhausting candle, okay, with low volume, right? Is dying, and then also the 200 SMA is like way down here. That's an indication that hey, it's gonna magnet to that level until the 200 SMA meets up again. So right around here, and then check this magic out. If you want to know if you're short bias on AMC, you want to know how far down will this thing go, and then you just do the quadrant from the highs to the lows of this move, right? So 50% is your next target, right? Because it's from the high to here, okay? And then if that breaks, your next level is right here. So now it gives you levels to play off of. So if it wants to go up, you have a resistance right here very tightly, right? And even for this guy to break through the upside again, this volume has to increase just as much as this volume right here. So when you put these pieces together and you're trading, right? You're watching these candles, the volume of the candles go up, and let's say 1 hour goes by and it took forever to like get up here. Now you're only competing with this volume, and then that volume was a weak signal. You can see it right here. So therefore, the probability of it selling off, when it pops, if AMC pops up over here with this low volume, then I'm gonna hammer short. Okay, I'm gonna hammer short because my stop is just the other side of that line. Okay, so that's the beauty thing about using this is your entries and your exits is much tighter, right? So again, this is your loss spread versus your win spread. Okay, and this is why you want to put a solid line to play off of for your entries and exits, so that way you minimize your losses and you maximize your gains. And that's how I do my scalps. And again, you can use this even on the daily. So let's go on the daily now. Okay. So on the daily, okay, where do I think it's gonna go next? So I have a high and then a low. Okay, right here. All right. So right now, This candle is above this line. So what is my thesis? We have a strong buying momentum with this long wicks. So my probability of scalping or swing trading is this target up here until this closes below, right? You can watch it on the 1 hour. So if that closes below in the first hour with low volume, I'm going to swing that to the downside. So you can use the same strategy for short term for scalping within like minutes, 1 minute or 5 minute, or you can use this as your swing trade strategy for downside or upside. And of course, you can see the 10 and 20 is so far away, right? So it's got room to come down to meet with 10 and 20 right around the 50% area, right? That's the reason it's called yellow because it's the golden number. When it hits that 50% area, this 10 and 20 is probably going to be right about that level too. Now you have 3 layers of support to go long off of for that next target. And then what are you looking for that long is volume increase. That's it. Rinse and repeat. All right, does that make sense?
Absolutely. Thank you for explaining that.
Yeah. All right. Questions. Everybody got it, huh? Did I explain it that good? Okay. So moving on, since no question. How many of you guys know what a low float is? Go ahead. Let's make this interaction. Unmute yourself. Let's talk. How many of you know or understand what a low float is?
Well, you're referring to whenever there's not a lot of not a lot of stocks to trade.
Yes, exactly. So the stock market is just based on supply and demand, right? And I can teach you the chart patterns, the indicators, and the volume, based on what you're seeing here. But to understand the basic fundamentals on what moves a stock up or down is based on supply and demand, right? So what I like to trade is a low float stock. A float is the available shares floating out there to the public that's available to trade in and out, right, in the marketplace. There's also a shares outstanding in the market, which is um, how much does the company available all together as the shares in ownership, right? So let's, for example, like uh, AMC, it doesn't show the float on here, but I'm gonna look at it on my phone real quick. So let me see, AMC. I'm looking at my phone now. Okay, so AMC has 516.78 million shares available. Okay, that's how much is available to trade. And the volume today traded 68.47 million shares. Okay, so what I'm trying to say is AMC has a lot of shares to trade. Okay, um, supply and demand. If there's a lot of supply and there's very low demand, the price is likely to compete lower, right? Or harder to raise the price up because there's really not enough buyers. Um, One good example, I guess, would be right now that we all can relate to is gas prices. Why is gas prices going up? Can somebody tell me that?
Supply is low and demand is high.
Exactly. So then there's very low supplies and there's a lot of demand. So therefore it becomes scarcity, right? So the next person is willing to pay, let's just say there's the gas pump that you're going to has the last 5 gallons in the city. Okay. If that's the last 5 gallons of gas in a city and you have $10,000, would you pay $10,000 for that last 5 gallons and you really needed it? Or you could think of, if I buy this for 10,000, I know somebody that's willing to pay 12,000. Now you just made $2,000, right? So in the stock market world, it's the same concept. You want to find companies that has very low float, very small amount of shares available to trade. And a low float to me is 10 million shares and below. Sometimes I consider low float maybe 20 million shares and below, but 10 million shares and below is what really makes the stock move, right? Because it comes back to supply and demand. So what makes the stocks shares become hot and on high demand? Well, one is news, right? So if a company does a press release of, like, let's say for example this company right here, DPRO, okay? So the last news was like a contract for their drones to be used as a medical aid, response, research, rescue, and all that stuff for the effort in the war and all that stuff. So they received a contract for some minuscule amount of drones to in order, right? It's if you read the news, to be honest with you, fundamentally and financially, it's very insignificant to the company, right? It doesn't significantly boost the company's revenue. But the news sounds really good, right? Oh my God, they got a contract to, for 100,000 drones or whatever, right? Financially, it doesn't really affect them, right? A couple millions. But the stock moves, what was it? From $1.60 to, what is this? Almost $4, right? Their market cap at that time, let me see, let me look it up. So the market cap right now is at 78.1 million. Okay. So 78.1 million. And based on the drone orders, that I think what it was like only a couple million or something like that. But they basically tripled their company valuation based on that news. Okay. Now, you as a trader, you have to think of it like as a hype, right? If there's enough buyers here, buying up the shares, because the float on the float on DPRO is only 32.1 million shares. Okay, and this day, let me see, give you an example. Look at this. You'll see the volume. Let me see. The volume is posted right up here on that arrow. 183.8 million shares traded that day. There's only 32 million shares available, but it rotated that many times to the hands of the traders. That tells you that there's so much demand for this based on that, you know, news. So therefore, supply and demand. Okay. So now everybody's fighting to, like, pay more for the next shares. Okay. So therefore, volatility. And you can trade Tesla all you want. You can trade Amazon all you want, but you won't find a stock that, you know, triples in one day before even the market opens. Okay? So now you can trade this to the downside or the upside. But again, the psychology behind these moves is there's always going to be a sell-off, because if you were if you bought all these shares, or better yet, you had, let me see, zoom out. You had shares from up here, or you had shares from over here, you had shares from over here, and you didn't sell this whole sell-off, right? So now you become a bag holder. So whenever a stock pops up that much, you're gonna be thank goodness. Alex, we can relate to that, right? When you're bag holding a trade like this long and the stock pops up, guys, this is on a daily or on the hourly. So this is like thousands or millions of shares right here, bag holding. Millions of shares bag holding, millions of shares bag holding, right? So therefore, when a stock pops up like that, believe it, you're gonna be the first person to go, thank goodness it popped up. I'm gonna unload my freaking position. I'm gonna get rid of all these trades. I'm gonna move on, F this stock, right? And that's exactly what happens. But you as a trader, you have to think of it from the technical standpoint because this is all hype driven and it just repeats this process over and over on many different stocks. Okay. So again, low float and how to find them. You can look up the fundamentals. Some of these data, like the low float availability, you can also go on. Let me see here. Finviz. So go on Finviz. Make sure you guys write down this website. CTPRO. You can see it right here. So shares outstanding, that's how many shares available for the whole company. Shares float, that's how many is available tradable shares. There's short float, how many are shorts holding it, and then short ratio and all that. But you can see all the fundamentals right here. Okay, so you can use Finviz. You can see the market cap right here and all the fundamentals of the company. And this is just for you to layer your conviction, right? You don't necessarily have to like do this every single day, but if you're gonna put some money into a trade, it'd be worth to just glance at this. You're like, oh, because after a while, you know where to look. You'll be like, the only thing that really matters to me, the first thing when I'm trading a company is the floats. Okay. Once I figure that out, I don't care about everything else because this right here tells me how fast the stock can move, and that's all I care as a trader. Do I get paid fast or do I get paid slow? Okay. That's how you can find it. Going back to Finviz is the next question was like, how do you find them? You can literally search on here, guys. Let me see. Let's go back. Finding close. So let's see, screener. So click on screener. Okay, so right here you can literally filter out a specific. So right here, float, short, shares outstanding, float right here. So let's say you want to find under 10 million. Okay, under 10 million. And if you want to trade something that has options, you can go here and go optionable. Okay, and then now you have that, and then also you can choose a sector. Let's say what's a hot sector right now? I think we just popped up. Let me see. Where is the sector? Right here. What would that be? Health. Let's just do healthcare. Healthcare is hot with COVID still kind of around. Let's see. What else? Interesting technology. Okay, let's just do healthcare. Boom. There you go. So now if you want to find a healthcare sectors, if coronavirus shuts down everything again, just go right here. Healthcare sectors under 10 million, optionable. You can even choose the price if you want to trade specific kind of price stocks, right? Let's say I like to trade $5 and under or $10 and under. Boom. So now I can focus on these ticker symbols. You can even look at the charts on them. There you go. If you're looking for a specific pattern, boom, right here. You can add your moving averages and whatnot. Like, let's see, what was it? Fundamental? Or was it technical? Technical. So technical. So I like to look at being above the 200-day moving average or below. You have right here 200-day simple moving average. You can go, let's see, below 200 or above. So let's go, let's be bullish. Okay, boom, you got one. Let's see, is that above? Price above. Okay, so this one barely just peaked out. So this is actually resisting. Let's see, this is 200. Okay, it is the yellow. So this one right here. So you have the 20 and the 50 right here. Guys, everything I've just showed you is like right here. So imagine when you saw this stock, when it started to basket, like what we've been talking about, you could have taken that trade and you know it's a hot sector, right? And boom, you could have rolled that freaking spike up, okay? And then you just rinse and repeat this process, guys. Let's see. What did it go? Technical? Technical. And then let's say I want to go below 200. There you go. So now you can look at these. You can see it right here. It's below the 200 SMA. And now you have a downtrend. Like literally, guys, you want to find an easy trade, just follow these steps. You have a downtrend against a 200 SMA resistance, and then see if that will reject. But this is a hot sector that we're in. So this is likely more of a bullish. As you can see, there's a huge flag right here. This is a bull flag. Okay, that's another candlestick pattern reading. But does that make sense? You liking this? Let's hear it.
Yeah, sure, TJ. One question I have is like, do you come here and identify the stocks, or do you actually have a list of like 10, 20, and then you just glance at them and then pick one of them?
Yeah, so typically, since I scalp the low float, small cap stocks, I just look up my gap scan. So I focus on my gap scan that you can like Thinkorswim has gap scan, but I use DAS trading platform as my scanner. Um, Before market open, it'll show all the small cap stocks that have gapped up or gapped down, and I'll typically just trade them. I'll trade a stock that has 500,000 shares traded pre-market, which is from 4 a.m. to 6:30 a.m. before the actual big market opens, and I'll just trade that. I look at the patterns and the news, and let's see what the volume looks like, and I'll scalp that stocks for the day. And then also have a halt scanner that tells me any stocks that are moving like aggressively up or down. It'll pop up on my scanner, and sometimes I don't even know what the company does. Like honestly, what sector they're in, I don't care. The one thing that really matters to me is how many shares are available to trade, and is does the news sound good or does the news sound bad? If it sounds bad and it has a low float, likely it's gonna, move down very quickly. The float to me is just an indicator to how fast or slow this stock can move in that day. That makes sense?
Okay, yeah, yeah. So basically, like you don't care about what the company does.
Nope.
You care about the numbers, like terms of lot.
Exactly. Exactly. So I'm more of a technical trader first, then the fundamentals come second. So I literally sometimes I don't even have time to look at the fundamentals. I just look at the chart, the price action, the volume, and then the floats, and I'll trade it. And I don't even know what they do, where they're at, either if they're Chinese stocks or they're US stocks or whatever. I'll literally trade it and make money on. And at the end of the day, I get asked like, "What did you trade it?" I'm like, "I don't know, some ticker symbol DRTS or something." And somebody would ask me, "What do they do?" I'm like, "I honestly don't know." And they'd get this deer in the headlight look at me like, "Why did you even trade?" Like, well, I have different criteria,
Yeah, yeah.
you know. So
I'm just curious, like, why you do not pick up why don't you go for the fundamentals? Like, is that like because of the ratio or the leverage you can get?
as far as the fundamentals,
Yeah, like let's say, take an example of Apple, Microsoft, or Nvidia. So is there a reason you don't pick up those because there is not much fluctuation or not much ups and downs?
So as a stock trader, uh, percentage of that movement of that company, like you mentioned Tesla or Apple or Microsoft, right?
Hmm.
When they move, percentage wise, they only move like 2 to 3 points, right? Or 2 to 3%. As an example I gave you on DRPO, that went from 165 to 384. So
Hmm.
what is that in percentage, right?
Yep.
So that's why I'd rather trade these smaller companies because in percentage gains they're larger. Okay, so I'm not looking to make 3% on SPY or on Microsoft for the whole day. 3% on DRPO, I only need a tiny portion, like a quick little snip out of it. I don't even have to catch the whole entire move, and I made my 3 to 5%. And I can rinse and repeat that process within minutes, right? So I can get
Yep.
3% here, 5% there, 10% there if I get really a good move. That's within minutes versus catching a 3% on Apple move for the whole entire day, and you have to be correct for that one shot, right? So that's why um, I prefer not to scalp, large caps.
Makes sense. Thank you.
Hmm. Like long-term investments, like Warren Buffett style, you could do that. But, as a new trader looking to build your account, you can't build your account trading large caps with a $5,000 account. You can. You might get, 50,000 by the time you're 60.
Yeah, yeah.
But I ain't got time for that.
I understand. Yeah, normally, like as I mentioned to you earlier, I I normally focus on the fundamentals, but I think I need to change my strategy.
Does that make sense now? I guess it's risk reward kind of trade-off. Like if you want slow and steady, they're safer. If you want fast, and explosive, the risk is going to be higher too. So therefore, your attention to detail in these trades is got to be precise. And to get precise in these type of high risk, high reward types of trade, you need to understand the behavior, the psychology, the manipulation behind each one of these crappy companies, right? Literally every single one of these is full of manipulation, and once you understand their agenda, you can just play off of it. You're not doing anything wrong. You just understand their behavior, right? The manipulation of the stock market is never going to go away, and it's always been there. It's just you need to learn how the game is played, and you can just be in the background, trading these manipulations, and you make your money.
Yep, I know. I know few companies they were trading the other day and then next week they're gone.
Oh yeah, yep, exactly. So once you learn that, and time will allow you to understand the fundamentals and the manipulation behind these stocks, and the more time you invest into really playing this game every single day, looking at the charts, putting the price candles versus your indicators and your volume together, you'll start to connect the dots. And once those dots starts to connect naturally versus you having to like think about them so hard to make sense of, then you're leveling up. Okay. And once you can
Mhm.
execute and make a decision in these trades with ease instead of confusion, you're gonna be better off long term. Okay. And I do this every day to try to share with everything that I learned. Like I eat, sleep, and breathe trading. So anything trading we can talk about, and I'll geek out about it.
Yep, makes sense.
So, all right. Well, looks like we're over an hour, but let's give it a few minutes. Do you guys have any questions? Is it making sense to you what I just explained? And do you see yourself using this in the near future?
Yeah, this definitely makes sense, bro.
The other question which I had, I think I might have asked earlier. The other question which I have, TJ, is like, how much money, because it's a high risk, high reward ratio trades.
Hmm.
So how much money do you recommend a person to start with?
With this type of trading, I always recommend zero, which means paper trade. There's many different platforms that you can paper trade and really practice this type of trading style. And once you get the consistency of execution, following your rules, your stop losses, and all that stuff, then you can graduate to playing maybe a $25,000 account. Okay. If you don't have a $25,000 account, you can trade with like a $5,000 account. But just know that you have to focus on building that account versus trying to get rich tomorrow. Okay. So
Yep.
focus on long term, building the your skills so you can have those, you know, 5, 10. I see people make half a million to $1 million a day in this market. That's what's the possibility. And you have to look at that long term by building your skills now with small increments. Okay.
Okay.
All right.
Uh, do you, sorry, one more question. I have my Fidelity is my broker. Um, I'm not sure whether they provide the paper money, but I know Think and Swim does.
They provide
Is
what?
this the paper money?
Oh, the demo.
Yeah,
I'm not sure. I don't think Fidelity has a demo trading account, but I know Thinkorswim does. So I would just recommend because I use Thinkorswim. I have paper trade and the actual account with them. So I would just open up an account with Thinkorswim. You only need $500. Then you can start paper trading, and it's unlimited. There's no limit to it. So
perfect.
that's what I would
Thank you.
recommend. Yep. Okay. All right, guys. Is that the last question?
I have one question. I want to go over a trade, but I don't know if this is the time.
All right. What was the question?
I've traded Tesla. I don't know if you can pull up Tesla real quick.
Yeah.
All right. So I'm starting to use the 10, 20, and 200 SMA.
Hmm.
All right. So I draw a line at uh, the pre-market pullback, 1004, 1004. I'm sorry for my English. My English is
No,
not
you're
my
good.
first language. So, right. So when I looked at the 5 minute, I see the 200 SMA
Hmm.
made a have a confluence there with that level. So I was confident going for the long.
Hmm.
So um, I took the long there, and since Tesla, the first 10, 15 minutes can push all the way all the SMAs, crossover SMAs, etc. I just took it there, and when it hit the 10 and 20 SMA, as they were flat on pre-market, I took profit there. Where would you have taken profit if you have taken my trade, or if you would have traded took my trade?
yeah, so on Tesla, yeah, it's definitely clean there. Okay, so let's look. Let me see, look at. Was that
TJ,
today?
TJ, I'm sorry, I was not clear about the question. What was the question? The last
So
part?
yeah, so the question
You
is,
see,
he's wondering if I would have taken the same trade based on what he's seeing here, right? Are you talking
Yeah.
about today, right?
yeah,
Okay,
today.
so today, um, would I have taken this trade, buying this dip into 200 SMA?
Hmm.
Is your question? I would have
Yeah,
probably done a starter. As you can see, it actually did dip there, right? And then it shot up because the reason I know that it shot up because it's the green candle. Green candle shot up and then it closed up here before it
hmm
sold off, right? So in this case, you're probably thinking, okay, this is a long now because it's above the 10 and 20. This could keep going, okay? So yeah, I don't blame you for, holding on, possibly getting stopped out on this trade the moment this candle flushed again, okay? So remember, the second time it tests a support level, it gets weaker. So as you can see, it tested once, popped up, tested again, and then the next try it broke, okay?
yeah.
So the third time it
All right.
broke.
So, all right. So, I took the trade there, the long. So I didn't know how far it could go. Tesla can break all SMAs at the first 10 minutes, 15 minutes.
Right.
Um, so I took it off on the when it hit the on the same 10 minutes, and on the 15 minute, you can see the my bad. On the 5 minute, I took it off on the when it hit the 10 and 20 SMA. Then my second trade was she wasn't able to break the break and hold the pre-market highs, so
Hmm.
I was looking for a short.
Yeah.
Then on the 5 minute and 15 minute, I was watching both. When it um, got below the 10 and 20,
Hmm.
um, it tested again the 200,
Hmm.
like you said,
Yeah.
and then it pushed back the 10 and 20. The 10 and 20 were pointing down, so I took a starter there.
Hmm.
Um, and I also added when it tried on the 5 minute, when it tried again. So I was taking half of my position, more or less 70% of the position on the 200 SMA, and
Hmm.
then I was looking at a breakdown. So at that flush, I took it all down. So
Yeah.
that also a trade you have taken, or
Yeah,
you have waited for more confirmation?
I would have taken that trade, to be honest with you. You're literally above the 10 or below because you stayed on the downside. You're below the 10 and
Mm-hmm.
20. You literally have four confirmation right there. You have existing line, I guess. Oh, that's a day's open. The day's opening price. So the stock
Mm-hmm.
fell below the open price, and that's a signal it's a weak stock now. So you have the 10 to 20 at crossover and the 200 as your resistance level. Yes, I would have taken that short. And of course, it just chopped all day, which is gonna happen. You're
Yeah.
gonna get caught in a
Mm-hmm.
choppy situation, but sounds like you respected your levels pretty well, and you got in and
Yeah.
got out based on the switchbacks, right? So
Yeah.
yeah, you did well there.
Yeah. Yeah. Like you said, I was looking for a long continuation. So when I'm looking for long continuation, I would like to see some retest and hold of the pre-market high. But since it didn't happen, and I saw that big candle to the downside on
Hmm.
the 5 minute,
Yeah.
I was looking more for a short.
Hmm.
Um, and more or less, I have been noticing that I'm playing options. So I play this strategy works really, really well. I'm still testing. I have not added size.
Hmm.
Um, this strategy works wonderful in the first half an hour, probably.
Okay.
It's really, really good for
Yeah,
those who place
I can definitely
options.
see that.
Yeah,
I can definitely see that.
probably the first hour it worked very, very good.
Yeah, good job on that, man. I can see that you respected those levels and just continue doing that, and you'll be just fine. You'll start to see that growth in your account as long as you follow your stops.
Yeah, basically, my stop on the short was the break of both 10 and 20, and if they start to gets flat, not pointing down,
Hmm.
I would have stopped right there. So, like you say, the risk reward was bigger.
Hmm.
The so that's why I took a trade. I wanted to see if you, yeah, uh, will agree with me on taking that trade.
Oh yeah, yeah, definitely. I know a lot of successful traders that took this trade as well. I'm in their chat rooms, and
Nice.
they got caught on this reversal because everybody was expecting this.
Oh,
This was a bigger sell-off, and I thought
all
it was a
right,
bigger sell-off too because I was on AMC short,
all
so
right.
I was on this AMC short on the 5 minute right here. I actually took
Mm-hmm.
took a trade right here on this downfall. So basically similar setup from what you did. And then I took let's see, I exited right on this green candle pop right here because that was too strong on the 1 minute. As you can see, the one
Mm-hmm.
minute it did it once and it did it again. So I'm like, you know what, that's too strong already. Basically, this is an exhaustion candle on the downside, and we know
Mm-hmm.
exhaustion candles means it's a reversal, possible
All right.
reversal, not always, but
Mm-hmm. Yeah.
possible.
Yeah, but you have to respect like no there's no perfect trade. So
Right, exactly. I'd rather be out than hoping it doesn't jump up.
right. All right,
So,
man. Thank you very
yeah, no
much.
problem. Cool. All right, guys. Well, it sounds like this was a good session tonight. This is recorded. I'm gonna post this later tonight as well. If you have any questions, just post on the main chat room right here. Just tag my name. But if this helped you, just make sure that you can either leave a testimonial or just let me know in the comments. Cool. Let's get ready for tomorrow.
Thank you. Thank you, DJ.
All right,
Thanks.
thank you.
Have a good night,
Right,
everybody.
Good night.
thanks. Good night.
Thank you.
Good night, guys.